Are you nearing retirement and looking for a way to access the value of your property without making monthly repayments? Well, in today's video, we're going to uncover the pros and the cons of a lifetime mortgage. Explanation of lifetime mortgage. But first, let's understand what a lifetime mortgage is. It's the most common type of equity release plan, designed exclusively for homeowners aged 55 and above, who have already paid off their mortgage. With a lifetime mortgage, you can extract a lump sum or take a drawdown loan from the value of your property, without having to worry about monthly repayments. Working mechanism. Here's how it works. You take out a loan based on a percentage of your property's valuation. The lifetime mortgage charges a fixed and compounded interest rate, which means that interest is calculated on the loan amount plus any interest already added. Since there are no monthly repayments, the debt grows each month, and due to compounding, it grows by a larger amount each month. Repayment scenarios. The repayment of the lifetime mortgage only occurs when the last surviving person named on the mortgage does one of the following. They sell the property, which could be with the possibility of transferring the mortgage to a new home. They move into a care home, or if they pass away. In the first scenario, the sale proceeds are used to clear the debt. In the latter two scenarios, the lifetime mortgage company can force the sale of the property to repay the debt. Loan amounts and eligibility. Now you must be wondering, how much can you borrow with a lifetime mortgage? Well, typically homeowners can borrow between 20 and 60% of their property's market value. The amount you can borrow increases with age. In some cases, if you have poor health or a terminal illness, you might qualify for an enhanced lifetime mortgage, allowing you to access a larger loan. So it's worth considering your options. Debt repayment and costs. One of the most important factors to consider is the repayment of the lifetime mortgage. Since the debt grows over time, it's impossible to state a precise repayment amount. However, most advisors can provide estimates for different periods, say after 5 years, 10 years, 15 years. Keep in mind that lifetime mortgages can be expensive, and if you have one for more than 10 years, expect the debt to double or even triple in that time. Pros of a lifetime mortgage. Now let's dive into the pros of a lifetime mortgage. First, it allows you to secure a loan even in your later years, when many lenders are hesitant to provide loans. Secondly, the loan amount can be substantial, up to 60% of your property's current market value. Thirdly, there are no mandatory monthly repayments, which can provide financial flexibility. Additionally, you might only need to pay off the debt after you pass away. And lastly, you have the freedom to use the loan amounts however you wish. The cons of a lifetime mortgage. Of course, there are some downsides to consider as well. First, not all properties qualify for a lifetime mortgage, so you need to ensure your property meets the requirements. Secondly, the debt can grow rapidly due to the compound interest, making it costly to repay. Exiting the loan early can be challenging due to the early repayment charges. And moreover, keep in mind that the value of the inheritance you leave behind might be significantly reduced, and you may not qualify for certain means-tested benefits anymore. However, choosing a drawdown equity release could help you overcome this obstacle. Paying interest and considerations. Is it possible to pay the interest on a lifetime mortgage? Yes, you can opt for an interest-only lifetime mortgage, which allows you to pay off the interest each month. By doing so, you can prevent the debt from growing rapidly and mitigate one of the biggest cons of a lifetime mortgage, the speed of debt growth. For a comprehensive guide on interest-only lifetime mortgages, be sure to check out our master guide over on MoneyNerd. Final thoughts and alternatives. The decision to get a lifetime mortgage should be based on your needs and preferences. It's crucial to be fully aware of the pros, cons, and the long-term impact on your estate beneficiaries. Remember to discuss these matters with a trained equity release advisor during the application process. If a lifetime mortgage isn't the right fit for you, there are alternatives available, such as home equity loans or downsizing to create funds. Your equity release advisor will provide you with information on the alternatives that best suit your circumstances. If you're interested in seeing if you could release equity, then simply click the link in the description below and fill out the short form. It contains a few questions like your property's value, your date of birth, and it'll give you access to quotes tailored to your circumstances. It's totally free to fill out, and of course it won't affect your credit score. So click the link in the description below and fill out the short form to try it out.